Welcome to this explainer. You know, for your ACCA BT exams, you absolutely have to understand that accounting, well, it's not just some isolated back-office math department. It's actually the vital, energetic information hub that literally supports decision-making across every single function in a business.
Today we're going to map out the accounting hub itself, plus how it connects directly to purchasing, production, marketing, services, and we'll wrap up with your key exam takeaways. Let's get right into it.
Here is your golden exam tip, so be sure to lock this in your memory. Accounting is the information provider, while other business functions use that information to plan, control, and make effective decisions. That is the core dynamic right there. Section 1. Accounting and Purchasing. Think about it like this. When the purchasing department places a massive order for materials, they don't actually handle the money themselves. Instead, they pass those order details straight over to accounting. Then, accounting steps in, logs the entry, and actually issues the payment to the supplier.
But it's not just about paying the bills. Accounting proactively sets the strict financial guardrails for purchasing. We're talking about setting acceptable credit limits, negotiating payment terms and discounts, establishing maximum price limits, and defining net balance parameters so the company doesn't accidentally overextend itself.
Moving on to Section 2, Accounting and Production.
Accounting deeply supports the operations side by carefully allocating costs for every single unit produced. They track exactly what is spent on raw materials, direct labor, and factory overheads, like power and generator fuel, so the production team knows their precise manufacturing costs.
And you know, this creates a really interesting natural balancing act. Production naturally wants the absolute highest quality of machines and materials, but accounting, they have to step in and focus on maintaining cost viability to make sure those top-tier choices don't completely wipe out the company's profit margins.
On top of that, accounting provides essential inventory control data. They are constantly answering the big critical question: do we have enough raw materials to keep the factory running smoothly? Because having to stop the manufacturing line is a massive waste of money.
All right, Section 3, Accounting and Marketing.
Believe it or not, these two departments have to coordinate incredibly closely. They collaborate heavily on sales budgeting, like estimating sales volumes, measuring the actual return on investment for expensive advertising campaigns, setting up product pricing strategies, and doing deep dives into market share analysis.
Now, a classic area for debate here is pricing. It happens all the time. Accounting usually prefers a reliable cost-plus pricing model, basically taking the product cost and adding a markup percentage, just to guarantee safe margins. Marketing, on the other hand, often pushes for market benchmark pricing to match or beat competitors, which can sometimes spark some heated discussions over cost control.
Up next is Section 4, Accounting and Service Provision.
Services are fundamentally different from physical goods, and they have 4 highly testable features. First is intangibility. This simply means services are actions or experiences. You can't package them up, put them in your pocket, or physically take them home as a customer. The second feature is inseparability. This means the service is created by the provider at the exact same time it is being consumed by the customer. The creation and consumption happen together. Third, we have perishability. You literally cannot store a service on a shelf for later use. Once the time slot or the action has passed, that service is completely gone. And finally, variability. Because humans are usually involved, every single service interaction is completely unique. It is extremely difficult to perfectly standardize a service compared to, say, mass-producing a physical gadget. Okay, time for a quick active recall check right out of the classroom. Which of those 4 features describes services being consumed exactly as they are created? Is it A, intangibility, B, inseparability, C, perishability, or D, variability? The answer is B, inseparability. If you got that, you are perfectly in sync with the material and definitely ready for exam day. Now, to actually manage the finances of these services, accounting has to calculate what we call charge-out rates. A common example for professional accounting or audit firms is charging roughly 3 times a person's base salary. That 3x multiplier safely covers the employee's pay, all the business overheads like training, and secures a solid profit for the firm. Plus, accounting faces the really tricky task of estimating extra costs if a service drags on longer than expected. They also attempt to measure the financial impact of intangible benefits. Things like long-term customer happiness are super hard to put a concrete number on, but they're incredibly valuable to the business.
Bringing it all together, let's look at Section 5, Key Exam Takeaways.
Basically, just remember this hub-and-spoke model. Accounting provides the central data hub. Purchasing absolutely relies on them for payment limits. Production needs their exact cost and inventory data. Marketing has to negotiate with them on ROI and pricing. And services require accounting to set those crucial overhead charge-out rates.
So as you continue prepping for your ACCA exams, ask yourself, how will you use this information provider mindset to completely ace your questions on how business departments interact? Thank you so much for joining me for this explainer, and best of luck with your studies.